Everyone, this is Rob Roy of Elliott Options, and welcome to TradeFinder Live. For those of you that are brand new, this is not the normal backdrop. I'm out of town, but even traveling, we still want to stay in touch. Normally, I sit in what I call the dragon capsule, surrounded by screens and movie cameras, etc. But this is good enough so we can get through the presentation. So if you've been here before, you know the drill. We have to show you this disclosure/disclaimer. It is a requirement. And if you are seeing this for the very first time, please go ahead and take a screenshot of it, read it in detail at your leisure. A couple of things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise, because we do have a lot of international viewers. So let's talk about what TradeFinder is for those of you that are new, and those of you joining us live stream on YouTube, welcome to you as well. We'll go through and talk a little bit about the market, obviously some happenings at the beginning of this week. We'll review any closed alerts that we've done for our alert subscribers, give you an idea of how that works. And then we'll review any past case study considerations that we have that may still be considered open, if you will, from past weeks. We got a couple of them, and then we'll go through and look to see if we can find one for tonight. And then with any time that we have left, we'll do a general Q&A at the end. Normally that amounts to you guys giving us your favorite stock symbol, and we take a look at what our indicators may say about your favorite symbol. So that's it. That's how it works. So without further ado, let's go ahead and take a look at chart of the market. And as you can see, we did move back to the upside significantly yesterday. And then you can see today was actually a pretty quiet day. Look how small that bar is. I was just commenting, if you haven't taken a look at the latest SPY update, we are on a push. We are so close to 25,000 YouTube subscribers. So if you're on YouTube now, go take a look at that video, hit the subscribe button, because when we hit that 25,000 mark, we're going to give away 5 of our full alert subscriptions. So you want to make sure you get there. Now, all you have to do to be included in the drawing once we hit that number is put in the comments section who you think might be one of my top 3 favorite PGA pros at the current time. Some of you may not be aware, my first career was as a golf pro right out of college before I started trading about 25 years ago. So that's where the golf connection is. And if you haven't noticed it, and there's a lot of comments there, you'll see them. And so you'll get the idea. But love to have you join us and help us reach that 25,000 mark. All right. One of the things that I talked about in that was it was nice to see some volatility come back last week after all these tiny bars that we had here the week before, where there was just no intraday volatility. That is a really boring time and a difficult trading time for option traders. We much prefer when the market moves. Volatility is our friend. If there's one thing that we ask for, it's not move up or move down. It's volatility. Just move. We don't care where it goes as long as it moves somewhere. So that was nice. And then we started the week with a big day yesterday. And then it's like, okay, where do we go from here? A little bit of a pause, but it makes sense because we're right back to where we were before that little dip. And we talked about how we didn't even make it down in this little mini correction, if you will, to hit the 50-day moving average. That's the line there in blue. We've hit that numerous times throughout this entire 5-wave move to the upside. We take a look at the DMI to see if that's starting to show some signs of life. Not really. Isn't that interesting that we did have a crossover, just a reverse cross? That's why you need the ADX, because you can't just rely on those 2 directional indicators because they whipsaw sometimes back and forth. So looking at the DMI, it's a combination of the directional indicators and the ADX. You have to have all pieces of the puzzle for it to give you a signal of the strength of a current trend. And the ADX it's kind of meandering up, but not really showing much of a move, even with these last 4 days to the upside, the end of last week and the beginning of this week. So still not a lot of strength to this move, at least not yet. Now, one thing I also noted was volume, and we did have all 5 days last week of average or above average volume to go along with that volatility. That was nice. And here we go. A little lesser volatility, a little lesser volume than to say in yesterday's move, and then just nothing. Like everybody went home after yesterday. Nobody did anything today in the world of trading. We actually did close out 3 profitable trades today based on the movement of these past couple of days, but It was more kind of a small follow through what happened yesterday than today. So we just see that we got a little doji there, but it makes sense when you take a look at the fact that we are just a little bit above that 10-day moving average. Say it with me. No security in any time frame gets very far away from the 10-day moving average. So we're just a tiny bit overbought with yesterday's move. A little bit of consolidation here is actually healthy for the market rather than coming straight back down. We expect things to go back to the upside. So our next two targets from an Elliott wave level are 452 and then 460. So we're awfully close to those levels, and we'll see what happens then. I think everybody would agree the market is a bit overbought. Also kind of talked about the Federal Reserve in the last meeting or in the last update, because when Chairman Powell had his press conference following the meeting, he came out and said they aren't even thinking about raising rates. But then when the minutes were released last Wednesday, it turned out that several of the voting FOMC members were actually considering and in favor of raising rates this year. So that's kind of a significant move from what Chairman Powell said just a week or two prior. So my thing was, is the Fed playing possum? They like to do this to where they don't want to shock the market, no shock and awe to the market. So they just kind of slide things in, if you will, so it doesn't create a bigger move. Well, it did create a little bit of a corrective move and then turned around and move right back to the upside. So that's kind of where we are with the market. So the next two levels, not much else to say there. So let's take a look at interest rates. There was a triangle there, and we need to see if we're going to get a breakout. My thought process is that the direction that we break from this triangle is going to tell a lot as far as how far the market goes. Do we continue to the upside, or are we going to get to the point where we're so overextended we need more than just a test back to the 50-day moving average? We need a bigger correction. Well, so far we're still in the triangle. We had the Elliott wave pattern on there. You can see that we are in a qualified 5-wave to the downside. Consolidation right here, that's just classic Elliott wave 5-wave impulse pattern fair there. I mean, that's what happens. So at a 41% 41% wave 4 correction, that's right at the 38.2% fib level. So there's room if we break to the upside to go higher, is up to 50 or even 61.8 in the wave 4 and still keep the qualified pattern. Or that's a good fib level. It's one of my favorites. I like the 61.8 the best, but 38.2 works a lot as well. And we could break to the downside and run right down to that wave 5 target. So I think if rates continue to go to the upside, we could have a little bit of a problem in the market. The financials would love it, though. That would be helpful to them because they've been really struggling with the spreads coming back in again, with rates going down. Had just that little short-lived bounce there and then turn around and been back to the downside. And the 30-year and TBT for the 20 are all looking the exact same. So no signal yet from the bond market. And that's, as I said, my opinion of where things go from here. I think we're trading. You trade what the market gives you. And right now, the trend is your friend. The trend's to the upside, all those cliches that you're used to hearing. But it's true. So we do have protection in case the market breaks down, because it could break at any time to the downside based on how far overextended it is. But then you also trade with the trend. So we're putting on bullish positions, perhaps. Maybe don't let them run as much as we normally would. If the profits are there, go ahead and take them rather than being exposed further. So there's nothing wrong with taking a lot of small gains along the way for whenever this corrective move is going to come. I was asked, and we'll do a Q&A at the end of this one as well. I was asked what my opinion was of when or what was going to cause the market to actually finally correct, because we get these little head fake corrections. And I think it's when the Federal Reserve comes out and says they are going to start tapering. I thought it was humorous that in the minutes they tried to be super clear on the fact that tapering is not the same as raising rates. So they're shrinking their balance sheet. They're just tapering off the amount of purchases that they're making, but they're not raising rates. Well, prices and yields work in inverse proportion. The Federal Reserve can just buy as many as they want because they don't actually buy them. They make an entry on their balance sheet, and then they tell the Treasury how much money they can go print. That's how it works. So if they're going to stop this transactional purchase, if you will, somebody's got to step in. Otherwise, there won't be as much demand, which means bond prices will start to go up. And then, you know, what happens with, or there won't be as much demand, so prices will come down and yields will go up. So it just works whether or not they think that it's going to be a same thing as raising rates or not. The function in the end will still be the same. Rates will go up. So less demand, prices will go down, trying to attract people to buy those bonds. And are other countries going to buy them? Maybe. The one thing that's saved the Federal Reserve thus far, and let's go ahead and take a look at the dollar, is the fact that the dollar has stayed strong. So that's been helpful to the Federal Reserve with all this that they're trying to accomplish with the excess liquidity. And my view has been, if we lose the dollar, then we have a real problem. We get to the point where the dollar starts to collapse. If it's not the currency of last resort anymore, it opens the door for something else to come along the lines, maybe something along the lines of, you know, a global crypto or something. Who knows what could happen? And so the dollar has stayed very strong. And some people are not so much in favor of that. Personally, I am. I do like the dollar to be strong. And I know that international trade prefers a weaker currency because it helps with the exchange rate. It helps in international trade. And most countries are international in their trade now. A lot different than it used to be years and years ago. Remember, Larry Kudlow used to talk about King Dollar. I mean, he was a big fan of having a strong dollar. And then that was before the global commerce exploded over the last 20 years or so. So you can see here that the dollar went right up and hit that tap box where that wave 5 is labeled, is actually labeled. The tap box is a time and price projection. If you're brand new watching us, streaming on YouTube, or it's the first time watching through our Zoom, this software program is called Profit Source. You can find out more information about it at profitsource.com. To me, it's the best Elliott Wave software that exists out there. I've tried all the ones that I know to exist. That doesn't mean I've tried them all. I've tried all the ones that I know that exist. And this is programmed directly from Ralph Nelson Elliott's mathematical algorithm. And so I was actually reading about this the other day. Somebody was talking about one, and then they even mentioned that it was their adaptation of Elliott Wave. Well, I prefer, if we're going to study something and study a technical system, that we go right from the horse's mouth, if you will, and study the system as it was drawn up, rather than trying to change it. I'm not nearly as mathematically inclined as Elliott was, so why fool around with it? It works just fine the way it is. And so when you come up here, you see this tab box. It's called time and price projection. So it gives you a forecast of where the wave 5 may go, which is really helpful. And once it's labeled and you're in a qualified wave 5, then you start to look at these targets. And this is just an average range of where it could go in here. And quite often we'll use this as helping to set up targets for spreads, butterflies, etc. And always watching the lower level as well, because you can see right here the dollar touched it and then reversed. But when we take a look at that reversal, it wasn't a significant one. We're still in a plain old basic uptrend of lower highs right along there, and you could actually draw a channel here and connect the higher highs as well. So higher lows, higher highs, nice trend to the upside. And we'll see if the dollar can bounce from this trend line here, or if we're going to come down. See, this wave 4 corrective level is also right at the 38.2% fib level, and it may come back down, or it may just run a little higher, be the end of the trend, and go into a consolidation phase, because it's done what it needs to do out of this pattern. So I guess my point here is that we're in a little bit of indecision. We had this nice pattern to the upside with the dollar. I actually talk about a zigzag that's on the dollar as well in that last recording. So go take a look at that if you want more information regarding the dollar. So I thought we would take a look at a couple of the other markets as well. People quite often ask about these. The IWM is the Russell. Let's see if it's done anything. And no, it hasn't. It's just staying within that long trading range that it's been in for quite some time, with the support level being right at 210, the resistance being up at 230, and it just ping pongs back and forth between those levels. We had a little triangle in there. I actually drew this to where it made it look like some sort of a big arrow, because you can see we had this point right here where it was a triangle within this consolidation area. And so then if we move the trend lines over, it gave the appearance of a big arrow pointing to the right. So then we had the breakout. All it did was come down and test that support level. Now we went right back up. And that's another aspect of triangles that occurs, is once the breakout happens, they get retraced. Very similar to gaps getting filled. They're going to retrace, gaps are going to get filled, but in neither instance do we know when those two are going to occur. How long is it going to take the gap to get filled? Sometimes it's immediate, sometimes it takes a while. How long does it take for the breakout of a triangle to get retraced? Sometimes it's immediate, like this. Sometimes it takes a while. They both go hand in hand from a time standpoint in those instances. So really nothing to tell us about the Russell other than you be encouraged that at least small caps caught a little bit of a bid here. And I'm going to save the Qs because we actually looked at that as a case study consideration last week. So I don't want to go through those. I'll save that for when we get to that aspect of it. But the XJO for some of our international viewers, this is the ASX 200 for Australia. It's also caught a little bit of a bid coming back after this nice breakout move from some long consolidation. I had drawn these odd looking triangles, at least to me, that's how it looked, where we had a consolidating triangle literally kissing an expanding triangle. The 2 points were touching. So we have some fat fingers tonight. Clicking there and then coming over here and there. So the 2 points were at the same spot, nice upward breakout, a little bit of a corrective move. And now you want to take a look and see, is that a qualified zigzag? Because we had clear impulse on the breakout. And then we come down here and you can see, yeah, right at a 50% corrective level. So we could see the ASX continue up all the way up to a potential 100% extension there at 78.57. So that's quite possible in the ASX, provided I don't think that the two markets are going to diverge too much, although you can see that the Australian market has certainly been stronger in its movement than the SPY has been here in the US. And then we have a lot of people asking about the Nifty from India. So we'll go ahead and take a look at that as well. We'll start putting that in there as part of our global markets that we take a look at, if you will. And you can see we're in a wave 3, nice gap up. Don't worry about all those gaps. It's because it's international. And so you're going to see a lot of gaps along those lines. So don't take those the same as I do, just like a regular stock or regular shares with their gaps involved in it. It's similar to other types of ETFs, especially international ones where they have gaps. Even the GLD has a lot of gaps in it. But we're right testing that recent wave 3 high. Looks pretty good. Let's take a look at the DMI here. Is it kind of starting to turn up a little bit, but the ADX is way down. Good looking 2 directional indicators. They were separated, no ADX to burst it to move forward. So a little bit of a correction. They came together and kissed, moved back apart. And now maybe that ADX is trying to take a look at moving up. But I look at the ADX crossing above the level of 20, slightly more aggressive than what you may read out on the internet about the DMI, where they talk about the signal as the ADX crossing 25. I think with our other indicators, especially along with Elliott wave, you can go ahead and utilize the 20 level. It's rare that I see it break above 20, set up really exactly as you would want it, and not get to 25. But there are times, and I highlighted that before, and it's in the last video as well, where it looks like it's going to get there, but if it doesn't get to at least 20, you don't jump the gun. It has to trigger. You have to have that ADX coming from below 20, break above it, be above the lower directional indicator. In this case, that would be the negative because everything's trending higher, and good separation between the negative and the positive. That's when you have your classic setup on the DMI. So we're not there yet, but it certainly looks like that could be a possibility. So it looks like, you know, the Indian market may want to go up and make a new wave 3 high in the not too distant future. So looks pretty good. And you can see that we've been consolidating here for quite a while. So this area right here that has acted as resistance for the early part of the year, support in the second part of the first half of the year, if you will. And maybe we're getting ready to break above and move higher from there. So that's generally the markets as I see them. Let's just go ahead and take a look at gold, and then we'll go into looking at our case studies. So the GLD had a big move to the downside. Now it's stabilized. So it's recovered that, but now we're back at this area that had acted as support resistance for a long time and kind of broke down from there. And we're turning around back up and we're testing that again. So if gold can get back above that level, call it 170, 169, 170, if it gets back above 170, then I think you start to look at gold potentially on the bullish side again. But for now, it's just testing that what was old support that broke down to see if it is indeed going to be new resistance, or can we break above it. Same type of setup with the DMI. Looks like something could be forming, but it's not there yet. So you can't call it, and you can't go long on just that by itself. So taking a look at Elliott wave, you can see there's not a qualified wave 5 pattern. The software does show you the corrective ABCs. I turn them off because they got these really cool tools for zigzags, and you can actually use them to find flats as well as a separate zigzag tool that will find the ABC flats. So I just prefer to draw them like that rather than have them automated on there. But if you like that, you can. So you're like, well, there's no Elliott wave here. Well, if I had the ABCs, the corrective waves turned on, then you'd see the ABCs all over there because there's not a 1, 2, 3, 4, 5 and a 5-wave impulse pattern. All right, so now let's take a look at a case study that we did close out today. I mentioned there were 3 of them, and I'm going to show you the one that performed the worst. So why would I show you out of 3 profitable trades the one that performed the worst? Because I do think that it gives a really good example of our methodology at Elliott wave options. So you can take a look at this. It was on CPRI, and it was in our volatility strategy. So it was a long strangle. The vast majority of the positions in the volatility strategy are going to be strangles. We have a unique way of doing strangles where we mathematically set them up to where if there's a breakout, there still has to be a breakout. But if there's a breakout, we're putting the math in our favor to potentially profit as fast as mathematically possible. But we have to get the move to do it. And if we take a look, here's going to be the entry chart. So every single alert, this is actually our website. If you're considering becoming an alert subscriber, great time to do it with the volatility starting to come back, and who knows what happens with the market from here. But the entry alert was sent out on May 21st. You can see that. And there's the triangle pattern that we had set up. And so as we're looking at a descending triangle pattern there, waiting for a breakout. And it did break out, but it didn't break enough. And here's what I mean. Here's the adjustment that we just made. So the position did go to a loss at expiration on Friday. It was an August trade, and Friday was August expiration. And you can see that it broke to the downside, another little triangle there, broke back to the upside, but stayed within the strikes, which is not normally what happens with these triangles. They're set up to where they should break enough in order to generate between a 30 and 70% gain. That's on average out of our strangles. Well, I'm not the type that just focuses on mathematical system of if you hit X% loss, close a position out. If you hit X% gain, close a position out. I feel like every trade is different. And I kind of equate this back to my golf career, where you could play the exact same course every day, but every round is different, right? You're not going to hit the exact same club from the exact same spot every single day. Every hole's different. Every round is different. I think trading is the same way. We're all looking at Elliott wave patterns, in this case, a corrective triangle pattern, but every position is different and should be taken on its own merit as far as whether you close it out or stay with it. Well, this one was moving. So why close it out at a potential X amount of loss? In this case, it did do what normally doesn't happen. So I'm showing you an example of what usually doesn't happen. So I could show you ones that here's what it does usually, and this is the majority of them, and just show you a whole bunch of nice breakouts. But I think you learn more from what are the oddities, what are the ones that kind of violate the rules, if you will. And that's what this one did. And so in taking a look at this current pattern, I'll bring the chart back up for you. You'll be able to see that we had come down and filled this gap here, or awfully close to it, and we were oversold short term. So there we are, separated from that 10-day moving average again. So the adjustment that we made was to go long. So we went long calls based on where we sat, and that was just Friday. And so here we go ahead and close the trade out, basically just 3 days later. And here's what happened with the breakout move. And you can see boom, 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 vertically straight up each day. And watch what happened with the position. So when we go up and take a look at where we were with the math, right, the profit loss, which everybody wants to look at, you can see that, well, we lost $490 on the original trade. We try to keep the risk management at $500 or less per alert that goes out. So that one expired. The next position going long was the same amount, put $490 in that, and then close it out within 3 days where we gained $1,000. So we recovered every bit of that loss. And instead of taking a system of, okay, you lose 50% and you go on, to me, that's death by 1,000 cuts. It's a slow bleed if you just follow that. If you want to have some sort of a different kind of risk management system, that's fine. I applaud anybody's risk management system if they stay adhered to it. But I would encourage you to try to at least open to the fact that every trade is different, and there's no just black and white set of rules that is going to work for every single trade. And the way we do it is the way I prefer to do it, and it's worked very well. And when you take a look at this profit loss graph, which we show for every single one of our alerts, you can see there, one doing so well, and then bam, and that's what happens out of these. You sit there and you have a loss until the move that you're expecting arrives. And so it was a very short-term adjustment, and all of a sudden that loss that we just realized on Friday is all gone. We made more than what we lost in closing it out just a couple of days later. So again, that's not the normal type of thing that happens, but it is unusual, and I thought it might be a bit informative for you, and that I would go ahead and share that with you. So that's the type of thing that our alert subscribers enjoy: entries, exits, and adjustments. I know there's a lot of services out there that just send out entries, and we do that here at TradeFinder, but then you're left to manage the position on your own. You don't get any guidance after that whatsoever, any commentary, anything. You just, hey, here's one, take a look at this, and good luck. And so we try to go the extra mile, and we have tremendous education. We get compliments all the time on our educational content, because we don't want to just be an alert service. That's not what we're here for. At Elliott Wave Options, we want to be an educational source. And so we want you to come to us to learn, so that you can take this information and move it into your own trading and trade on your own in the future. That's the idea. So anyway, let's go ahead and take a look at some of the past case studies that we had looked at. And there's only a couple of them left. We've closed out most of them for nice gains. If you've gone back and looked at our history, and you can go back and look at all the recordings are there on the internet for you to see. So you YouTube people, you can go back and look at all the past trade finders if you like, and follow along with the trades. We do them live. These aren't, Monday morning quarterback. These are not back tested trades. These aren't examples. These are live case study considerations that we're finding together each and every week. So back on May 11th, we still have this one, and we're in an adjustment process with this one as well. Here we had a nice triangle, and because of the volatility that was priced into this stock, even though it broke out, and you can see it made the nice breakout move, and then there's that quick retracement. So same exact scenario as CPRI. So now we have two of them that kind of violated the rules, but there's pages of the ones that follow the rules. And so we came down and we tested this level here, and so we had adjusted with puts, and then we took those off, and now we've adjusted with calls because of the test of support, and those are doing well now. So I don't think we're going to have to keep this one open much longer. And we did send this one out as an alert to our subscribers as well. So that one's moving well. And then we jump all the way up to August 3rd is the next one that we have that you might not have considered closing yet if you would follow along with the case study consideration at the time. So jumping from May to August. And then you can see, well, it moved to the downside and created the wave 4. So we had a wave 3 labeled. Now we created the 4, 50% correction in the wave 4, and now it's bouncing back to the upside. So my comment last week was, well, let's give it a chance to see if it bounces off of this wave 4. So if you were in this one, I would say, hold it, see if the wave 5 labels and we actually go up and hit that target. This one still has a chance to work out to be a really nice trade. It's only a couple weeks old, so we'll see how that plays out. And then the next week on the 10th, we had CDW, and taking a look at that wave 3 top, you can see we've moved nicely to the upside here. And notice how these targets move. These forecasted targets move because this is not saying that's the wave 4. The wave 3 is the current qualified wave. That's why it's colored with this 3. The wave 4 is forecast here. If the wave 4 were to start today, that's where you could likely look to see it come down towards that 180 level. But so far, it looked like we just had a little move back, staying in this uptrend as well, right through here. And looks like we're going to try to take out that previous wave 3 high. Let's look at the DMI and see that, well, it was pretty strong up till the wave 3 peak, and then we kind of curled down a little bit. Now it looks like it may be setting up for another run. So we have had the positive directional indicator move back above the ADX. Let's see if that ADX can turn and move back to the upside, and then maybe we get that run up to that target, that 205. It'll be interesting to see. Now, this is one that was a little bit overbought at the time, but it was on the list. And then you can see what happens when you're a little bit overbought to start with. It comes down to the corrective move in the wave, following the wave 5. So looking at that DMI, that's a mess. And then if we look at our shorter term indicator, the CCI, if that was diving down more, it would show that it's short term oversold. It's not really to the point where it's short-term oversold. So my point here is that I'm willing to stay with positions and make adjustments if you have a clear-cut pattern of what's going on. At this point, who knows, that wave 5 could be completely over with now because it already extended 130%. So maybe it's not going to go any further, and the stock is going to come all the way down here and test this area of support down around 195. So I think at this point, and I think this is only going to be the third one, that since we started TradeFinder, of all the case study considerations we've looked at each and every week, this is only the third one that we're going to say close at a loss. Every other position, whether or not we sent it out as an alert to our subscribers or just talked about it here and followed along with what it did until it gave us an exit signal, only 3 of them would have been losers. All the rest would have been winners. So I'm going to go ahead and cross this one off and say, just walk away from this one. I didn't like the way it acted today. It didn't act that great yesterday in a strong market. And there's too much room to the downside here that it could move down to. The CCI is not low enough. The DMI is a mess. There really is no clear-cut signal here other than the fact that we may very well have a wave 5 that's complete. So we'll take that as a loss and move on from there. And then last week, as I mentioned, we looked at the Qs and we had a triangle pattern and said that we wanted to, based on where the market was, that we wanted to find a strangle. We didn't want to do anything directional last week because something was getting ready to happen in the market. You can see where the Qs were. They'd had a nice run. They were certainly the leader of the market for quite a while. They're taking a pause. That's why, is something else going to take the lead? Is it going to be financials? Not if that, we can't look at that yet. I didn't look at the financials because they're going sideways. You're not going to get much of a signal there. But if interest rates do break to the upside, then financials could be a leader. And maybe the market still does okay on an upside break. We went through the economic numbers in the last recording, again on YouTube. If you're live streaming on YouTube, go take a look at that video. where we talked about the economic numbers are mixed. Some are pretty good, some are not so good. What does that tell you? It's just a lot of indecision right now in the market. So when you have indecision, what do? Well, you put on a strangle, so you don't care which way things go. And then you can see that, well, clearly the Qs broke to the upside. Gave us just a little bit of a head fake there, like it's going to go lower. Then nope, clear cut move to the upside. And when you take a look at that bar, that's better looking than the bar on the SPY was, right? So remember, we have this little tiny doji here on the SPY, but you come back and look at the Qs, and there was a little more strength behind it. So let's see if there was any volume here, and not really. So the bar looks a little bit better. Really no volume there either. And let's take a look at the 10-day moving average to see if we're a tiny bit oversold here. And when you have a triangle breakout, sometimes they just take off and run. Sometimes they come back and test the breakout. Sometimes they give you a head fake and the big move is the other way. Everyone is always anxious to take the other side of a strangle off because it helps you generate more gain, right? Because you're buying a call and buying a put, you don't care which way it goes. But one of those options is going to be making money and one's going to be losing money. Well, we have it set to where mathematically the one that's making money is making money as fast as possible based on how the delta, gamma, et cetera, all the Greeks work. And then the opposite option, the one that's in the opposite direction of where the breakout is losing money as slow as possible. But there is no doubt that one's making money, one's losing money. So that's going to limit somewhat your potential gain. So people are always quick to, okay, well, let's start it that way. And once it makes its break, let's take the other one off. Well, I encourage you to be patient. Wait till you have a really strong, convicted breakout before you take that other leg off. I've told lots of stories. I won't tell it tonight, but lots of horror stories of people that have done that, gotten a bit greedy, and paid the price for it. Hold on to the put right now until we see if we can get some sort of a strength indication behind this. You know, the DMI still not back above 20, kind of acting and looking exactly like the SPYs. ADX, good separation between the two directional indicators, but not a signal there yet. And if we put on the CCI, you can see that, gosh, we're already in kind of an extreme point to the upside, meaning that the CCI is telling us that, hey, we could consolidate this or even come back and test that breakout point. So test of the breakout is completely normal. That wouldn't be unusual at all. And the CCI is saying, hey, be careful. Don't go hard long on the Qs yet. Not just yet. Let's see how things play out over the next few trading days. So that pretty much sums things up as far as our past case study considerations, the markets, what happened with the Qs with our case study consideration. So, I mean, it's doing well so far, but keep that put on if you were following along with it. So let's go ahead and see if we can find a case study consideration for tonight, and then we'll open it up to questions. Now, isn't this interesting? Down here, we have this momentum scan. And by the way, if you're seeing this for the first time again, this profit source, if you are an Elliott Wave Options subscriber and you have profit source, the people at the Hub organization that created this program noticed that they were getting a lot of people that were Elliott Wave Options subscribers, probably because I'm showing it all the time, right? And so they wanted to follow along. So they threw in some extras. So if you're an Elliott Wave Options subscriber and you have profit source, these things under Elliott Wave Options, you get all of these things right here. And these three here that say Elliott Wave, bullish corrective, bullish impulse, and consolidating stocks, those are my searches that I program that I've developed over the years, and they're included in there. So you can look at the same thing that I'm looking at every single day. Now, this momentum scan came about because so many people were talking about the low dollar stocks with all the Reddit stuff and everything. And, you know, trading is harder than just finding a stock that has a low float and a high short interest and trying to create a short squeeze. And by the way, even all the subscribers to Wall Street bets and et cetera are not large enough to create a short squeeze on their own. What happened when you had AMC and GameStop and all those was some of the institutions got behind them and helped push that. That was the meat that helped move those to the upside. And then they back out, and then you're left with retail traders that just don't have the buying power to create a short squeeze. If there's institutions that are shorting a stock, retail traders just don't have the wherewithal to push them out. We wanted to say, well, okay, if that interests you, having the lower dollar stocks and trying to get a move, well, let's look at some lower dollar stocks, but look at lower dollar stocks that have good solid technicals behind them other than just short interest. So that's where that came from. And just out of curiosity, I don't know that I've ever seen 8 of them show up on there. So I want to take a look. Well, 2 of these are basically the same thing. LAC is on there twice because they changed exchanges. You can see it has data on the New York Stock Exchange and data on the Amex. So sometimes it takes a while for the data provider to merge those 2. But then we have Cotter. That's interesting, isn't it? The iShares. And you know that they're evacuating all the people from Afghanistan. Qatar is one of the places that they're going before they come back here or wherever they're going to wind up. So that's pretty interesting. You would think that maybe housing all those might be an economic burden, not putting it into the point where you could see something move to the upside. So as soon as I see this over here, where each one of these blocks is only 50 cents, I'm no longer interested because that's not enough movement for me. So just was curious out of that. So let's go back and look and see. You can see just on the impulse stocks, there's 6 of those. So let's stay there and see if we can find something. We've got the strangle on the Qs. So we'll look and see if we can find something that may be directionally based. Align Technologies, 5 below is retailers. The retail numbers had been down, but seem to be doing a bit better. So you got a little bit, if you're a fan of fundamentals, you got some fundamental backing there. We use fundamentals as a foundation, but we're primarily technical traders. So we don't ignore fundamentals, but we primarily look at technicals. But again, there's still that support system of having good fundamentals behind them. So let's look at those 2. I'm curious about both of those, Align Technologies and 5 below. And pretty nice move back to the upside there. So the way my searches work is I have all of this system of technical indicators together, and that forms the base of the results. And then once I see those, I know that if there's a good Elliott wave pattern, it's going to be supported by the technical indicators that I like, that I've fooled around with, that work well together. What might be the weakness of one indicator, we have another indicator that's its strength. So they all gel well together. And then I put the Elliott wave pattern on to see what the current pattern might be. And you can see that it's in a wave 3, really expensive stock. So you'd want to have to do some sort of a spread on this, possibly even a out of the money butterfly up there around that wave 5 target. Let's look at the DMI, isolate that, and it just did break 20 today. Had a nice movement to the upside today, broke 20 today. That looks pretty good. That one's going to be a tough one to beat out, and better volume than what the market, so better than market average. It had average volume where the market was way below. So that looks pretty darn good. But I do want to look at 5 below and see, but we'll pick between those 2 as far as which one becomes our official case study consideration. So we award one each week to be the official one. And that's how we go back and look at the previous ones. Now that DMI looks a little more mature. So let's isolate that and see. You can see that it still looks good, but the ADX has broken above 35. It's nearing that level of 40. And if you're familiar with the DMI, by the way, we're going to start a indicator mastery class next Wednesday. First, it's going to be every Wednesday in the month of September, where we're going to go through our individual indicators to where you can see if they are looking or understand them. So when we show them, you know how they work. So it's going to be a deep dive into each one of them. That's why it's called the indicator mastery. So the indicators that we're looking at are the ones that I utilize in our technical trading system. You can go to our website if you want to find out more information, EWOtrader.com, or if you become a subscriber, an alert subscriber, you get the class for free. All of our alert subscribers get our educational classes. Something that you may want to take a look at if you're looking for some new technical indicators or curious as to what we use. So that looks pretty good, but it just looks like the DMI is showing that we might be a little mature here. It did break out of some consolidation, so that part looks good. That's pretty similar to what Align did as well, but it just looks like there's more room to move from the Align chart, and this one's not cheap either. It's in the 200 level as well. We'll look at the moving averages and see that we're sit there. Let's take a look at the CCI. This still has some room to the upside. It's not an extreme point. So let's see, where are we trading? 232, and we have a target at 250 possibly. It could go that far, even with an extended DMI, because that ADX could get above 40. It's still between the two directional indicators, just barely, but the positive directional indicator is moving up. Now let's see what its volume looked like today. Not quite as good looking as Align. So what I'm going to do is I'm going to go ahead and award Align as our official case study consideration for this week. So ALGN with an upward bias. And then I'll put on a watch list, take a look and see, just out of curiosity, what 5 does. Again, some of the retailers are doing okay. Capri that I showed you is a retailer. And so that one shows that there's a bid coming into that sector. So keep a close eye on that one, but Align is going to be our official one, and we've got a few minutes left, so I'll go ahead and open it to questions. We have support on, and if you would try to pick out a few questions and forward them to me, Zach, I'd appreciate it.
Absolutely. So we'll start out first with a question from Pankaj. Can you please cover Roku, Visa symbol V, awesome weekly, OTTOM in place? So out of the money in place, autumn in place.
So there's Roku. And so here's the problem here. With this wave 4 corrective level, you can see it's extended 80%, so it disqualifies it. So this Elliott wave pattern here, this Y5 wave pattern is disqualified. So when I see that, what I do is I just turn that off and say, would I put this position on without the Elliott wave? And then we take a look at the indicators, and boy, it's kind of bearish. So let's go back and look and see if there's any potential for a downside trade here. It is at an area of support right through here, and it held that at 340. So I wouldn't want to enter a downside trade right now either. It's just kind of at an influx spot, Pankaj. If it breaks below 340, then I think you have a bearish trade down here. It's going to retrace that previous 5-wave pattern based on the rules and likely go test the previous wave 5 low. So if it breaks 340, it probably goes to 280. But at this point, it's holding support. And the CCI is coming off a low level, but not an extreme point low. So I like to trade. We've done some short-term trades. We had 3 of them within a 2-week period that were 0 days technically. And you're like, well, how can you have a trade that's 0 day? It wasn't a day trade. It meant that it was open and closed in less than 24 hours. So if it was opened at 2 o'clock in the afternoon and closed at 1 o'clock in the afternoon the next day, that's less than 24 hours. So it doesn't tick forward as an actual full day. So it looks kind of odd when you see trades on there that are profitable trades with 0 days. But when you're looking at the CCI, again, that's why I was talking about the indicator mastery class, is the fact that every indicator on its own is a good indicator. Personally, I would never rely on any one single indicator, but when you put them together in a system, then you can create a really good technical system. So the CCI has its merits, and when you're coming off an extreme point low, you could get even just a short-term bounce, not necessarily looking for a full-on Elliott wave pattern to fulfill itself. You wouldn't want it to be against you, but you wouldn't need it to hit that target if you're just looking for a quick bounce type of a trade. And so the CCI is moving up. It's heading towards 0, so that's neutral as well. So again, it didn't come off that extreme point. Otherwise, I'd say, well, you may get a really good bounce. So it may bounce from here. That's a tough one, Pankaj. If you're long, I wouldn't get out. If you're looking for a short trade, I wouldn't put one on now. If you're in a short trade, it might be time to take the gains and see how it handles that 340 level and then re-enter if it breaks below that. And then your other one was Visa, symbol V. Take a look at that. And that's a much better wave 4 corrective level there. 40%, around this at 38.2% fib level. That looks really good. Had a nice zigzag. Look at that zigzag pattern to the upside within the wave 3. So nice wave 5 pattern with the 4 being labeled there at that fib level, and plenty of room to move to the upside up towards 270. Now, if the retail sector is starting to look better, what are people using to buy retail products? They're using their credit cards, right? So you can create a fundamental story there as well, in addition to a pretty decent looking 5-wave pattern. Looking at the DMI, not really getting a confirmation signal there, at least not yet. So you might want to wait and see if it bounces from there. There is also some support there where that wave 4 is, right here. And so, hitting that fib level off support is all positive. CCI, very similar to, well, this one actually went a little bit lower. And this one's a little more favorable as far as the potential for a short-term bounce than Roku was. So, yeah, Visa looks, if you wanted to be real aggressive, you could go long now. If you want to be a bit more conservative, and see, that's the issue with the DMI. Now you're seeing exactly how the indicators that we put together work. The DMI is a little slower. It's a little more of a lagging indicator. It's a great indicator for trend strength. So if you're trading a trend and you want to follow on with that trend, having a supportive DMI is great. But it takes a little while for the DMI to set up and give you the qualified signal. CCI is far more responsive. It's a day-to-day responsive thing. So this could be telling you, hey, we're coming off of this extreme point low. We're at support. We're at a fib level. That's one where I think if you wanted to put on an aggressive long trade, you could go ahead and do that. And you know where your stop is, right? 230. If it breaks that, then it's broken below support, and we could be coming down, possibly down to the next level at 210. You probably wouldn't want to hang around for that. So, an aggressive long position here with a stop at 230, I think makes an awful lot of sense on Visa. Okay, what's next?
All right, we have a couple requests from Bill and Steve for Bitcoin.
Oh, I forgot to show that. Thanks for reminding me. How can I go through a week without showing Bitcoin? And we take a look at that, and Elliott wave has been so spot on with Bitcoin. For those of you that are watching, if you're live streaming on YouTube and you haven't been to a TradeFinder before, if this is the first time watching, go back and look at some of those past recordings on the channel, on our YouTube channel, and you'll see how well Elliott wave and these zigzag patterns have been forecasting what's gone on with Bitcoin. It's just been absolutely spot on. And so here was if you missed it, here was the big zigzag pattern to the downside right down there. And then we had this classic consolidating triangle, a descending triangle, which I pointed out doesn't mean it's going to break to the downside. Common misconception means it's going to break out, could go either direction. And so we're right here at this 61.8% level. And then we also have another zigzag pattern to the upside here. When you can draw the line there and see that we consolidated right there at the 100% level, which coincided with the 61.8%, which was an extension to the downside there. And we could be moving higher, and the 161.8% extension is right there where the 38 is. And I just don't, maybe we stop there, but it certainly looks like Bitcoin wants to break. I know it touched 50,000 and that backed off. It's a round number. That's the kind of stuff that happens. It was a good point for maybe a few people to step in and take some gains. But it looks like it wants to at least go up towards 53. And if it gets there and still wants to go higher, then, and I think this is a high likelihood, we talked about this way back on Bitcoin, the potential of it coming back towards 60,000. Again, I think that is very much a possibility here. If we take a look at the DMI, you can see that ADX is so strong. You'd like to see that positive directional indicator get back into gear, though. It hasn't really been super supportive of this move, which makes you wonder, are we going to be able to go past that 161.8% level? It's likely to get there, but that may be the end of it unless that positive directional indicator can get back above that ADX. Now you can see the ADX has set its marks, and it's been higher than where it is now. And that's what you want to look at anytime it gets above 40. Okay, well, how high has it been in the past? Because again, every stock's different. Every round of golf's different, same thing. And every trade's different. So moving up here, there's plenty of room out of the ADX for it to move. At least there's separation. It does show that the buyers are in control here. But if you're looking for an extended move and possibly up towards that 60,000 level, I think that positive directional indicator has to kick in to support that move to the upside. Maybe you want to look at the CCI, but that's not going to be at an extreme point coming off that nice move. And it's neutral. It's at plus 100, but that's not an extreme point for Bitcoin. It can go much higher, as you can see. So there's nothing negative on the CCI to prohibit that. So I think that that's likely what happens. When we look at the moving averages, clearly we got a little bit overbought. And I know that it trades 24 hours, but there has to be a point when we're looking at an end of day data where you end a day and you start a new one. And so that's what we're looking at here. But I don't know. Bitcoin to me looks like it wants to go just a little bit higher before we have to reevaluate. Next,
James would like to look at LAC.
Okay, that was on our list. And which market are we looking at it on the MX or let's see. We had this one and we got that nice bounce and got out of it and it looked like superheroes. And I mean, that's the thing with these vertical moves that I don't like. What goes vertically up comes vertically straight back down. Same thing that happened with Capri was a vertical move to the downside, went vertically back up. So I don't like that. I like a 45-degree angle because it's harder to figure out when these vertical things are going to occur. So we got out, but now we've turned around. We're getting right back up there again. But this is a little more normal. And this looks like it could have some staying power where we have more of this 45-degree angle type move rather than this vertical big spaceship stuff here. I know those aren't going to hold. They just don't. So if we take a look at the moving averages here, we're a little bit overbought at this point in time. And so you can see that perhaps a little more consolidation here might give another entry. Let's see if there's an Elliott wave pattern. There is. We're in the wave 3. So that's a labeled wave 3. We came back. We haven't labeled the wave 4 yet, but look how we're trading right in that area. That could label any time. Now, it does have a doji today. So you'd want to kind of keep an eye on what happens tomorrow. But we are a little bit overbought. So maybe it pauses again tomorrow. It could rocket back up again tomorrow, though, off that doji. You never know. It's right there at the 4, and maybe that 4 labels, and that's it. And then you're on the wave 5. But I think that looks pretty good. You just want to kind of give it tomorrow to see if it gives you an entry. Awesome looking DMI. So I see why I wanted to look at this one. That's a great looking setup. I didn't select this one because we've already had an alert open and close. It worked out really nicely for our subscribers. But hey, there may be another entry there, and we'll take a look at this tomorrow as well. And we're well off the extreme point high that occurred on the CCI. So going up towards, was it 23, 24 is where that 5 is forecast. You can easily see that occurring. So that one looks really good. That could end up as an alert tomorrow. Still on the screen, still watching it. But I didn't cover it, but I'm glad you selected it because it is a good one. But I didn't cover it because we'd already done it. All right. Couple more. We're at the hour mark, but a couple more real quick, and then we'll wrap things up.
Okay, sounds good. I was going to say this next one was a good one because you mentioned Capri. Question regarding Capri, the chart showed at one time that the trade was minus 99%. If someone sold right then, would they have lost 99%? Sometimes some of the older entries are more than minus 100%. How can I be negative 100%?
Well, that means that it expired worthless. The original strangle expired worthless. So what happened was, yeah, it was 100% loss. So it went down, but it didn't go down far enough. Then it went back up, but it didn't go up far enough. And then we got that vertical drop, but it stayed within the strikes to the point where it was just going like this, which is extremely rare. They don't normally do that. It did. But then because of that vertical move, it gave us the opportunity to come in and make the adjustment. And then 2 days later, that entire loss was recovered. So it expired worthless on Friday, the original position. But then the adjustment recovered all of that plus some in 2 days.
All right, and we are.
So rather than just walking away from, even if you would have said, I'll close it at a 50% loss, well, then you ate a 50% loss if you just closed it and walked away. So our loss got greater than that, granted, but it gave us an opportunity to make an adjustment, and we do a lot of it. We do a lot of adjustments.
All right, absolutely. We are at 1 minute after the hour, so it's up to you, Rob, however many more questions you want to take.
I'll do one more.
Do one more, one final one.
So I'll do one more.
Paul just mentioned that, hi, Rob, thank you very much for showing how you deal with adverse moves. So just wanted to pass that over. And the last one we'll pick here is from George. Amazon tried to get in early today, gave up.
Yeah, well, that alert went out last week, so it's going to be a lot tougher with the fact that it's had two big updates today. But the vertical nature, let's go back and look at, we're just creeping above the 10-day moving average. We've got the 50-day in the way. We do think it's going to come up and likely fill this big gap here. But again, who knows how long that's going to take? That's why we have a butterfly on it again, because it may bump its head here. Now, I've been surprised at how well the butterfly has performed, because when you get something that moves that fast, you go, oh, darn, wish I would have put something different on, because, a lot of times the butterfly is beautiful because time decay starts neutral and then becomes friendly throughout the course of time. So if you look at putting on a directional trade with an out of the money butterfly, it's great in so many aspects. But in fairness, if the trade moves and gets there really fast, you probably could have generated a little more gain with something else. The butterfly will still be profitable, but what it does is, if now the opposite, let's say you have a nice trend and it's just taking its time and it's running that 45-degree angle that I like, and you have a call spread on, or you have long calls and time decay is hurting you, and you get to the point, the target point, and you close it off, you've made a nice gain. Well, in that instance, the out of the money butterfly generates a tremendous gain. And because the cost is so low, you can have a very low cost, very high potential reward strategy. So my point here is that the butterfly has already generated, it's right about 100% gain in the butterfly already on this move. And I was a little surprised at that, because it's moved so much in these 2 days. I thought that might have been a little bit quick, but it's working really well. And if we do bump our heads, maybe at this resistance area here again, which coincides probably the 50-day moving average will be right there. Maybe we go sideways for a bit. That's just going to tick that time decay out of the butterfly, which will be great. And that'll be really helpful over the long term for that becoming a potential big trade. So if you wanted to get in it and you still haven't, and maybe that was the point, it moved too much yesterday, too much today, just don't give up. You said give up. Don't give up, because you might get where this calms down a little bit. It might, bump its head here a little, and then the spread may come back just a little bit and give you another opportunity to get in. So I wouldn't quite give up yet. But yeah, I've been very impressed how that's performed with two big moves to the upside out of Amazon. So, well, it's a great strategy. That's a good one to finish on, because we talk about out of money butterflies a lot. They're just a fantastic strategy, generates a lot of interest, and we'll continue to talk about them. So thanks everybody for your viewership. Again, I say this each and every recording, but I mean it. I'm passionate about it. We appreciate you spending your time with us. Time is so valuable. It's valuable to each and every one of us, and we appreciate you spending some of it with us. And